Good day, everyone. For today's session, we will be discussing the preparation of financial statements of a service business. It is important that we review ourselves to the different financial statements in any business. We start with the income statement, followed by the statement of changes in equity, followed by the statement of cash flow and the balance sheet. Take note that the other term of the income statement is the statement of financial performance, while balance sheet's other term is a statement of financial position. Okay, take note of those other terms because it could be interchangeable. Now, financial statements are the final product of the accounting process. They are the means by which accounting information is communicated to the interested parties. And who are usually the interested parties? These are the stakeholders of any business. So it could be internal and external. For the internal, it could be the employees and the management itself, while external are the customers and government regulatory commissions. So the complete set of the financial statement includes the income statement. Other term again is a statement of financial performance or comprehensive income. And statement next rather is a statement of changes in equity. Balance sheet or other term for the balance sheet is the statement of financial position, correct? And next one is a statement of cash flow. However, in introductory accounting, in our subject basic accounting, only the first three financial statements are discussed. The statement of cash flow and the mechanics on how to prepare the accompanying notes are discussed lengthily in higher accounting subjects. So again, we'll just focus our attention in basic accounting in the following financial statements: income statement, statement of changes in equity, and balance sheet. And I almost forgot the fifth of the complete set of the financial statement is the notes to financial statement. Now, in the preparation of the financial statements, the ultimate guide is the worksheet. All the information in the financial statements are taken from the worksheet. In other words, it is merely transferring the information from the worksheet itself to the statement of comprehensive income slash income statement and the financial position, or also called balance sheet. As you can see in your screen, we are still following the worksheet of the Kasalan for You, which is a service company. Now, we start with the income statement. The income statement shows the result of the business operations for a given period. It communicates to the interested users the profitability of the business. This is usually the first financial statement prepared by the bookkeeper or the accountant. The income statement covers a certain period, say 6 months or 1 year. Sometimes, or in most cases, it is on a monthly basis, and it represents the revenues earned, expenses incurred, gains and losses, and net income or loss recognized during the period. That is why the label states for the month or for the year ended. We have to take note that when we talk about income statement, it is when revenue exceed expenses, there is an income. Likewise, when expenses exceed revenue, there is net loss. Okay, so as I mentioned in our classes, when there is a the formula rather is we have revenue minus the expenses, you'll get the net income or net loss. How will you know if it is a net income or net loss? If the result is positive, it is net income. If the result is negative, it is net loss. And when the result is zero, it is break even. Break even means zero profit, zero loss. Anything above the break even point or the break even will result to income, while anything below the break even will result to net loss. Now, what is the part of an income statement, or what are the different parts of the income statement? Okay, so this is the good form that we are talking about. So all of those you can see in the screen, the revenues and expenses are actually extracted from our worksheet. Now, take note of the different parts of our income statement. We start with the heading, which is located in the middle portion of the document that you are making. And then we start with the company name, the format itself, company name, the name of the financial statement that you are using or doing rather, and the period and date. For this example, it is for the month ended June 30, 2020. Now, the following are the expenses. So we'll follow the format of the revenue less expenses. Take note that we follow the arrangement based in our chart of accounts. If chart of accounts is not available, just follow the sequence which is given in your worksheet. No need to put expense because it is already stated on the upper portion, less expenses. Do not forget the double rule when you are done. Now, take note that the consulting revenues and referral revenues are both revenues earned by the business and therefore should be added. You also have to add all the expenses. So again, the formula is total revenue less total expenses. You'll get the net income. And when you reach the net income, do not forget to put a double rule. Double rule signifies in accounting that it is the ending portion of your computation. This is the good form of the kasal-kasalan for you income statement. Next is a statement of changes in equity or statement of changes in owner's equity because we are following a sole proprietorship here. The statement of changes in equity represents the different elements that affect the equity or owner's equity during a particular period, considered as the bridge statement between income statement and the balance sheet. This is an example of a merchandising statement of changes in owner's equity. So we start with the beginning capital, followed by any investments done by the owner during the period. We add the profit or the net income. We deduct if there is a net loss. And then we deduct again any withdrawals made by the owner during the year. The ending portion of the computation will give you the owner's capital ending. And this owner's capital will be reflected in your balance sheet as the equity balance there. The presentation here starts again with the beginning capital of the owner and adjusted by the following items. We add again any investments if there are any during the period. We add if there is a net income and we deduct if there is a net loss. We also deduct if there is a temporary withdrawal or simply withdrawal or drawings of capital by the owner. Now, this is the statement of changes in equity or owner's equity of the kasal-kasalan for you. Take note that there is an additional investment, profit or net income, and withdrawals present. So the Kalisay capital for the end of June 30, 2020 is 520,476 and 83 centavos. Take note of that amount because that will be reflected as your equity in your balance sheet. Speaking of balance sheet, the balance sheet is also known as a statement of financial performance, a not performance position. The balance sheet, speaking of, otherwise known as a statement of financial position, is a structured financial statement that shows the resources employed by the business and the sources from which these resources were acquired. It is called structured because the presentation follows a format prescribed by governing professional organizations or government regulatory agencies. The term resources refers to the assets, while the term sources refers to liability and owner's equity. The sources of the business are provided by the owners and creditors. Hence, there are two claims against the asset of the business: the claim of the creditors and the claim of the owners. The claim of the creditors is technically known as liabilities, while the claim of the owner is called capital or equity itself. So the balance sheet, take note, also represents the accounting equation, which is assets is equal to liabilities and equity. Now, the total assets should be equal to the total liabilities and total owner's equity. So the statement or the balance sheet indicates the liquidity and solvency status of the business. Liquidity means the ability of the business to pay its current maturing obligations, which is evident in your current liabilities, while solvency is the capacity of the business to settle its non-current liabilities and still remain stable. Okay, so again, liquidity refers to payment of current liabilities, while solvency refers to payment of non-current liabilities. The Philippine Financial Reporting Standards, or PFRS, requires that the presentation of financial statements should follow the aggregation principle and line item concept. Now, we still follow the heading, which starts with the name of the business, title of the report. In this case, it's a statement of financial position or simply balance sheet, and the date of the statement as of. We use the term as of because the balance sheet is prepared the balance sheet is prepared as of a given date. In writing the date, therefore, it starts with the phrase as of. The term as of there implies that the information presented in that balance sheet is true and correct only as of the date. Thus, if the statement is dated as of December 31, 2016, all information contained in the statement is true and correct only as of that date. The information may no longer be true on January 5, 2017 or the following year. Okay? It also shows the cumulative balance as of that date only. Okay. Now, again, we follow the proper heading here. We use the term as of instead of for the period or for the month ended. There are two ways for you to show the format or two ways to present the balance sheet. You can use the account form and the report form. This is the account form. The account form presents the three accounting elements in the following format. Assets are listed on the left side while liabilities and the equity are listed on the right side. The owner's equity is written below the liability section. The account form of the balance sheet is generally used when there are several accounts involved. Meanwhile, we follow the report form. The report form represents the assets first, followed by the liabilities and capital. The statement is reported in a vertical manner. This form is generally used when there are only few accounts involved. So this is the report form for the kasal-kasalan for you. Take note of our capital there, which is around 520,000 pesos. Do you have any questions? If you have questions, you may email your teacher. Thank you so much, everyone, and have a great day.